You've got to pay taxes on that capital gain, yes. And you will also have to pay back your depreciation that you got. So you guys have heard all this stuff about bonus depreciation. It ranges and every deal is a little bit different.
This is a story about a dude named Lane. Then one day he went, tried to rent them out, and then he became one of the best of man.
Can you explain how depreciation recapture works in syndication deals? Okay, so let's just say everything goes really well and you put in $100,000 and in X amount of years, you doubled your money, you got some cash flow and you got your payout at the end and you've got $100,000 of capital gain. You've got to pay taxes on that capital gain, yes. And you will also have to pay back your depreciation that you got. So you guys have heard all this stuff about bonus depreciation. It ranges and every deal is a little bit different. But for this example, if an investor put in $100,000, let's just say they got $50,000 of first year losses. So a minus loss of 50. And what they do is they take that passive loss and they can either use it to offset their other passive income, or if they're implementing real estate professional status, rep status, which there's some hoops to jump through for that. They can use that to offset the ordinary income. Now, what that really cool is for like doctors, for example, that might make $600,000 if they're implementing real estate professional status and they have several $100,000 of passive activity losses. Maybe they can take $200,000 and lower their $600,000 down to $400, effectively saving them 100 G's right there from taxes at 50 cents in every dollar. Those are getting into the tax strategies that we help people out in the family office. Or if you just simply want to do it on your own, find your own accountant. But then I say, you're the one who has to learn this type of stuff to empower yourself. If not, your CPAs may or may not do it. Likely they're not going to do this stuff for you if you don't ask for it. You know exactly what to ask for. So you're going to, in this deal again, you put in 100 grand, you got a $50,000 loss your first year, and then the deal cashes out. Now that $50,000 loss, you got to rebook that. And this is called depreciation recapture. And so in addition to that $100,000 gain, you're going to add that $50,000 taxable event onto that. So you're looking at adding $150,000 of income to your taxes. Now you'd have to pay that unless maybe you went into a whole bunch of deals like you probably should be, and you're stockpiling a lot of passive activity losses, and you just take $150,000 and you extinguish that. If you did this all in the same year, it's all a kind of a moot point that you went into another deal and you got maybe even more passive activity losses that you began with. And this is where, if you're looking at it on a myopic basis, yeah, you got to pay $150,000 depreciation recapture and capital gain at the exit. But what you should be doing is going to many deals, building a reservoir of passive activity losses to dip in and out of, and then creating that space for you to go and place that $100,000 gain into two deals. And then you get $100,000 of depreciation, at least in that case, and that offsets that gain right there. And this is how you continually kick these cans continually down the road. Again, I'm not a CPA lawyer. You can check out the syndication or the tax guide at SimplePassiveCashflow.com/tax. But not getting any tax or legal advice out there. You guys be silly to do that. But this is not your personal situation, and I'm not a CPA lawyer, but a lot of our clients do this and help people learn about this type of stuff. So a cost segregation study helps to get that big first year loss that we mentioned. Taxpayer to take advantage of current bonus depreciation laws in order to depreciate their assets by taking a loss on paper. If the current bonus depreciation law starts to phase out slowly in 2022, how will this affect LP investors on syndication deals? I'm trying to find. So what I'm looking for is the chart on the IRS website. Okay, bummer. It's hard to find, and I'm not finding it. But here's how it works, folks. This is the simple passive cash flow version. That really makes sense these days, especially IRS stuff. But in the year 2022, you still get 100% of the bonus depreciation. It's extra, more aggressive losses that pushes out a whole bunch in the first year. And every year after that, it steps down up 20%. So 2023, you're still going to have 80%. 2024, you're going to have 60%. In my opinion, you get 60%, 40%. That's still pretty damn good. Most of you guys are not doing real estate professional status. So it doesn't matter. And I think a lot of you guys hear about all this stuff about, I want depreciation. You're like, yeah, I want that. It may not make sense for you, again, if you're not doing real estate professional status on your taxes. You're not doing the 2,000 hour or 750 hour rule thing. Unless maybe you're selling off all these single family homes, right? Like in 2017, I sold 8 single family homes off. I had a $250,000 depreciation, recapture, and capital gain there. But because I had all this passive losses, I just offset one for one. So great example how this works in a while. I still think whether you put in 100 grand, you're getting still maybe $50,000, $60,000 back. I mean, if you cut that 20% down every year from 2022, 2023 on, I still think you're still getting a pretty dang good paper loss. Even with regular depreciation, you're probably going to offset the gains from the first couple of years of the investment anyway. And I think maybe the strategy is to go into deals 2022, 2023 to maximize how much you're getting. And then just like a squirrel, keeping a bunch of nuts in the tree, and you just go out and get a whole bunch. And that's what I kind of do. That's why a lot of times I'll invest in the pref equity to get a bunch of passive activity losses. Because again, I've got that hoarder's mentality, right? The scarcity mentality where I just want a whole bunch of nuts, or in this case, passive activity losses to keep on my, I think 82, 84 form. I might be mistaken, but I think that's the form that it's all stored on your taxes. But that's how I would be playing it. I think that they'll probably come year 2024, 2026. I'm sure something else will happen where they'll extend it or something like that. The thing I like about this is most people don't know about this stuff, so it's really obscure. Therefore, it doesn't being brought to the public light, and therefore they won't take it away. Like how 1031 is always on the chopping block, or Peter Thiel's of the world will screw up the IRAs, and that's becoming a debacle. Who knows? It may just be a rumor now or just hearsay, but I think the IRAs, self-directed IRAs, are going by the wayside in terms of its utility, which is why I always said don't do it unless you have a higher than $330,000 adjusted gross income, or you have more than $500,000 in your retirement accounts already.
This website offers very general information concerning real estate for investment purposes. Every investor situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.